You are watching, listening to the Financial Survival Network. I'm Kerry Lutz. It's 11/1/21, and the news is standing still for no one. Crypto's on fire. Gold, silver, maybe getting ready to break out of their externally imposed exile, shall we say? And what happens when a country actually stops QE? Where do the bond yields go when the buyer of last resort is no longer buying? Well, those are all great questions. Let's talk with John Rubino, dollarcollapse.com. Make sure you go there, subscribe. John, hey, so it's been a couple of weeks and time waits for no man.
Hey, Kerry. It's hard to know where to start this time, right? You mentioned three or four things that all deserve to be the lead story, but only one can be. So you choose.
I choose. Well, let's talk about inflation, because it's something that you and I, having lived through the 70s, we're around the same age, witnessed the really negative effects of it. Now, in a low inflationary environment, which we've had for the past 40 years, most of the people who were alive then are dead now. The people who weren't alive don't even know what inflation is. They have no idea what's in store for them. Stagflation, everything else.
Yeah, it's true. The pandemic wiped out most of the people that were alive and paying attention in the 1970s. So it just leaves us, the teenagers back then. But yeah, the similarities between today and the 1970s are so ominous, and they're multiplying, military misadventures and rising inflation and energy crises, and it just goes on and on. And, remember the 70s ended with a huge spike in precious metals, a blow off top in inflation, and then a massive recession that was almost a depression back then in the early 1980s. So we're creating all the conditions for a replay of that. And, it's just a matter of time till we see if it plays out that way. But, the inflation story is fascinating right now. And you just posted a good article that I think everybody should read about the multiple ways that inflation is showing us that it's here to stay. I think the biggest and best indicator on that list is labor costs. Wages are just going through the roof now. There are all these signs of McDonald's.
Yes.
With $21 an hour starting pay, out front. Now, if McDonald's is a 21, remember when the $15 an hour minimum wage was this big issue? And it was something that, and it was really aggressive. How are we going to get that? We should have a $15 minimum wage, but how can we do it politically? Well, now McDonald's just blew that out of the water. $15 is chump change for burger flippers. And that kind of sets the floor, right? I mean, McDonald's wages are the lowest that you will consider if you're an 18-year-old or something like that. If you can't do better than McDonald's, you're not going to bother. And so now everybody else in the lower reaches of the service economy has to raise their wages commensurately. And that percolates up through the food chain. And it's not temporary. McDonald's is not going to turn around and cut their wages back to $12 an hour or whatever it was before. Once you start paying people $21 an hour, you can never go back, because otherwise everybody will get disgusted and just leave. You'll have a mass walkout. Yeah. So this is embedded, and it doesn't seem like it's going anywhere, because there are still shortages of workers in most big industries. Truckers, my God. The reason that the supply chains of the world are so screwed up is in large part because they can't find enough people to drive the trucks from the ports to the railroad stations or wherever it goes from the port, because nobody's around to drive the trucks, even though you make good money as a truck driver. That's a really good paying job now. It's not good in any other way, but it pays pretty well,
A lonely job. It's a very
can you imagine, the life of a long haul trucker? They deserve serious money. Yeah.
A lot of bad food. You go into those people getting paid $18, $20 at McDonald's now, plus they get a sign-up bonus too. John, don't forget that. They could be getting hundreds of dollars for a sign-up bonus to become a burger flipper, but I would venture to say they probably will hold off paying them the bonus till they've been there like 6 months or something, you know?
Well, and the really interesting addendum to the McDonald's story is that they're at the same time aggressively investing in automation. So they're biting the bullet and paying up to get people right now, but they're hedging their bets by developing, automated burger flippers and things like that, with the idea probably of replacing the lowest level, most repetitive kinds of work with machines. There are cross currents out there, which is a bigger deal, the labor shortage now or automation 5 years from now. And where does that leave workers? Who knows? This is a really complex time with a lot of stuff going on. But I think we can say with certainty that for the next few years, wage costs are going to drive inflation, which in turn is going to put pressure on the Fed to aggressively tighten one way or another, because you can't have consistent 6 or 7% inflation going forward, unless it's in stocks, bonds, and real estate, which the Fed doesn't count as inflation because that just enriches the 1%, so it's obviously good. But if it's wages, if it's actual regular people making more money than they did last year, the Fed doesn't like that, and that's what we're seeing now. We're seeing, dramatic increases in wages. So the Fed's under a lot of pressure, according to its own models, to smack that thing down, and we'll see what they do. But is this a Fed meeting week? I think it is, right?
Yes. FOMC is meeting later in the week, yes.
Okay, so the people who listen to this talk should then just turn around and see what the Fed is doing, because that's a really big deal. That is potentially changes everything just this week. If they announce tapering or, God forbid, raise interest rates a little bit, then the financial markets will be very different than the ones we're looking at right this minute.
Yes. Well, the question is, though, they can talk this game. Can they actually do it? Look what happened in Australia when they tapered. The central bank stopped buying the government bonds. What happened to that yield almost immediately?
That is Australia all of a sudden is kind of the harbinger of bad things to come. They're a police state for one thing, but they're also trying to. Well, I don't know if they're trying to tighten. I don't know what the reason was for this, but there was it was either the 2 or the 3 year government note that they had targeted an interest rate for of 0.1%. They were keeping it at that level, and a new issue of that paper came out, and the central bank decided not to buy any, and immediately the yield shot up to 0.5%. So it went from 0.1% to 0.5% in a heartbeat, which in the government bond market is a huge increase. That's a really big deal when bond yields move that dramatically. And it was all because the central bank, they didn't actually do anything. They just refrained from doing something. They refrained from suppressing this interest rate unnaturally. The minute central banks, and that's Australia. But there are a bunch of other central banks that are now aggressively raising interest rates because the developed world can live with inflation, but the emerging markets cannot, because a bigger part of, say, Brazil's population lives on the edge, where they spend most of their income on basics like food and shelter. So you let inflation happen in those sectors, and those people starve, or else they have to decide whether to be homeless or fed or whatever. And then they hit the streets, and then you get massive riots, and then you get regime change. So a lot of developing countries are already raising interest rates aggressively and are up in what we would consider normal ranges, 6, 7, 8% for short-term interest rates, and somewhat more than that for long-term interest rates. So the rest of the world is starting to normalize because they have no choice, leaving the developed world, the US and Europe and Japan, in this interest rate fantasy land, which we can handle now. But the question is, are we any better than Brazil or Chile or somebody like that in the long run? Are we exempt from financial law? And I would say probably not. Where they are now is where we're going to have to go. But going there will be catastrophic for all the leveraged speculators out there, which is to say pretty much everybody these days. So yeah, we're getting closer to the point at which central banks lose control of all of this. which is that, that was always the end game for the libertarian / gold bug analysis of this world. And now it's visible out there. So fascinating times.
I don't see anything that's going to stop it. And when they do start raising these rates, what I put in my latest article, massive defaults, debt defaults around the globe, especially for those people who are in foreign currencies and paying off their debt in US dollars, that's all gone. And then we're going to see major deflation, collapse of the stock market. There's just no way around this. I mean, and if they do manage to raise it up and none of this happens, then the deficit goes way up because they're financing all the debt that's being taken on, deficit spending. So right now they monetize it, but if they stop monetizing, what's going to happen then? The cost of federal interest will become unsustainable. It'll be bigger than the military budget. And that's not a good thing. So now we see from Crescat Capital, there's an article about gold and the miners. As it says here, the gold miner is the only major sector that now generate positive free cash flow. Everyone else basically is negative cash flow, even though their stock prices are going up.
Yeah, okay. If you want to be reassured about your precious metals holding, check that article out. I've got to post it in Best of the Web in the breaking news section on dollar collapse. And it's just chart after chart after chart, every one of which paints gold in a really favorable light. And the one you mentioned, I think, is the most important one for the gold miners, because at $1,800 an ounce gold, they're generating free cash flow. And they're, on the chart that they put there, they're the only major industry, only major sector that is doing that. And, free cash flow is one of those things that papers over numerous sins. You almost can't be unsuccessful, no matter what else you're doing, if you're generating free cash. And that's the case for the mining industry right now. So, and now combine that with the fact that their reserves are shrinking. In other words, they're taking more gold out of the ground each year than they're finding, which means they're shrinking. They're going to evaporate unless they find a way to acquire a lot more reserves in a hurry. And they got this free cash flow with which to do it. So that means the junior miners that have really good reserves, that have found serious gold in the ground, are going to be very hot commodities going forward. So we should see, given that dynamic, lots of free cash flow and a desperate need for more reserves, we should see a lot of M&A in the industry, in which the big guys buy out the little guys at increasingly attractive premiums. There's going to be bidding wars and stuff like that, because people with extra money coming in tend to engage in stuff like that normally, and now they've got a really big incentive to do it. So it's interesting for the miners across the board. The big guys are going to raise their dividends and report better numbers, and the little guys are going to be bought out by the big guys. So it's barring that shooting war with China or something else that is possible and it's out there. It looks like a really interesting time for the mining industry, and especially for the junior miners.
Yes, definitely. Their time has been coming for so long that eventually you start to lose hope. But the price of gold, at $1,800 is not a pittance. Perhaps it should be far higher. Certainly, we believe it should, but it's not like it's on clearance sale now. Although there are many out there who do believe that it should be way higher than where it is now. And maybe that's the case. I'm not sure. But I do know that eventually every dog has its day. And this golden dog and the silver dog are going to have their days again. Every commodity does. Every commodity, John, has gone up so much this year in the past 12 months that really gold and silver are the only things that really haven't gone up. I mean, look at copper. Copper hit resistance. Couldn't quite get over $5, but it's been over $4 a pound for 9 months now. So to think that precious metals aren't going to follow, I think is probably not correct.
Well, I think the dynamic with precious metals is that inflationary expectations take a long time to change. In other words, as you said earlier, pretty much everybody who's a living adult right now in the US has never experienced inflation as a real sustained thing. They've lived in disinflationary times when inflation was very low, so low that you didn't really have to care about it. And when that's been your reality for such a long time, it takes an awful lot of new information coming in to change your mind to the opposite extreme. And so it's taken a while. But if you look at the 1970s as our template, and look at what gold and silver did, they bounced around and they bounced around and they bounced around despite chaos for most of the early part of that decade. We had energy crises and a big recession and then inflation spiking. And yet gold and silver didn't really do dramatic things until towards the end of the decade. And then they went parabolic. Eventually everybody concluded that, oh yeah, inflation is a real thing. What am I going to do? And they all piled into gold and silver. So I think that dynamic could play out again. And I don't really think, based on the whole labor cost thing and the price of consumables, the necessities of life are going up and everything in a way that people notice. So I think based on stuff like that, it won't be long before inflation becomes a meme. It'll become just the thing that we all believe, and we'll expect it to accelerate from here because we're extrapolating our recent past into the indefinite future. And precious metals will just go crazy then. And I don't think we're that far away from that time.
Hey, and another thing driving it, which I refer to in the article, is that that we're like looking at still in the midst, even though all these baby boomers died during the pandemic, we're still in the midst of a massive retirement wave. You and I are kind of like getting close to the tail end of it, but for the next 5 to 7 years, boomers going to be retiring en masse. And what does that mean for Social Security and Medicare? Got a chart there. Literally, their benefit curve goes straight up parabolic, John. And that's another reason why there's just not enough new workers to pay for us.
There's going to be a really interesting intergenerational conversation at some point where the 25-year-olds start saying, Grandpa, I'm sorry, but you're going to have to wait a while for that hip replacement. And that experimental cancer treatment, I'm sorry, you're just not going to get that because otherwise I'd have to give you all my money. And I love you, Grandpa, but I'm not going to give you all my money. It's going to be that kind of a conversation. And boomers will not take it well. We're a greedy generation. We've had it our way for such a long time that we are going to want all the money that the 26-year-olds are making. So
death panels are coming. Hey, you outlived your useful life. You're not making any money. You're not going to be a productive enough member of society. So maybe it's time for end of life counseling, John. And like you said, those hips that you need, just limp around a little bit. It's okay. You'll be fine. And
but Kerry, anyhow, there's the inflationary implications of all that, though, or what you introduce that with, and that's really important because, well, actually, it's a cross current kind of thing because retirees are deflationary. In other words, we tend to sell our stocks and move into cash related things because we're going to spend money now instead of make it. Mm-hmm. But at the same time, the government has to spend huge amounts of money on us, which it borrows, and it has to finance that with super low interest rates, et cetera, et cetera. So it's not clear which of those is the more important force going forward. I suspect the infinite one. Money creation is infinite, so that'll probably win out. But 50 million new retirees, that's really deflationary. So it's not good for stock prices. It's not good for big house prices. We'll all be selling our McMansions probably. And so we'll see. That's one of those really interesting trends that you can't predict the totality of very easily, but it's going to be fun to watch play out.
Going to be interesting, that's for sure. And hey, I hope my kids they're oblivious to paying taxes anyway. It just gets deducted from their paychecks. So it goes up higher. They don't seem to be concerned. So if they're not concerned, why should we be concerned, John? Right?
Because there's a point where they will be concerned.
Well, hopefully I'll be gone by that point, so they won't turn the gun on me. But
Well,
you
just
know
just
what I'm saying.
promise them if they're good that they'll inherit your Tesla,
Yeah. Oh,
and
yeah.
that'll keep them in line.
Yeah, well, I'm helping to save the world with my Tesla, so I feel so good about myself, John, because, Tesla is just one of those products you feel good about. It's kind of like recycling, even though recycling is a big farce and everything, the energy consumed with the additional trucks and the labor and all this, and then the fact that they can't recycle more than half the stuff, so it goes into the ground anyways. But hey, at least you tried, right? So, and you know what? A Tesla is so much better than a Prius. Drives better. It's all around better. So if you can help the world driving your Prius, then you are a superstar driving a Tesla, John.
Yeah, and that car of yours does sound like fun to drive, but Kerry, I think it's time to short them again, though. Here's
No,
why.
you
I
do
mean,
that.
their vehicles are awesome, and it's a valuation thing. But what happened just lately was pretty fascinating and pretty emblematic of where we are in the bubble world, because they got a big order from Hertz, the rental car company, for something like 100,000
Yeah,
cars.
$4.2 billion order.
Yeah, but their market cap went up by 10 times that
30
amount
billion.
on the news. Yeah.
That
So
makes total
they
sense.
became more overvalued rather than less overvalued. Yeah. So I think it's probably time to go back in and try to short them again. I haven't looked into it yet. I shudder to think what the premiums are on options for Tesla right now, but we'll see. If put premiums are not insanely wide, I'll probably try shorting them again.
All right, short Tesla at your own peril, John. Yeah, as long as you're doing it through options, fine. I would never actually short the stock. I mean, that is just unless you had a butterfly spread or something that I don't even understand how to do.
Yeah, I wonder if you can even do that, short Tesla by just directly shorting the stock. I've never tried to do that, but
You'd have to like hedge it. You'd have to do a spread. You know, you can't just short a stock like that. Uh, I mean, yeah, you could borrow. Sure, they'll loan you the shares, but the thing goes up $100 in a day. You want to kill yourself after that. So you have to short it by options and really, premiums through the roof because the volatility and all that. And I don't know. You're a braver man than I, John.
well, that kind of happened with the last time I shorted them. I bought put options,
Mhm.
but the premiums were so wide. In other words, you had to pay up so much to be able to do that. But even Tesla did go down, went from 900 something to 500 something, and I got out with a tiny profit. It should have been a way bigger profit. So it was a really disappointing trade because of those option premiums. And it might be the same thing today, because probably there's a lot of people with the same idea who are buying puts, thinking, oh my God, it has to crash from here, and so they're overpaying for the put options.
Yeah.
So yeah,
Well,
I don't know what the solution is.
that's a Nassim Taleb bet. You know,
Well,
keep
you want
shorting the market and shorting it, and eventually you're going to be right because the anti-fragile event, the black swan, is going to happen. And the longer the black swan event doesn't happen, the more likely is that it will happen, especially now with everything going on.
And a backdoor way to short Tesla is to short the ARK fund, Kathy Wood's fund. It has much more modest put premiums. And they own a lot of Tesla. At least they did own a lot of Tesla. I
And
don't
crypto,
know if she took profits on this run, but if she didn't, then you can kind of sort of short Tesla by shorting her fund.
yeah, yeah, you have to look at the holdings. Or you could short an ETF that's disproportionately Tesla. Because
Mhm.
look, it's all the other NASDAQ 100 stocks too. The cloud, Microsoft, Amazon, all of them are grossly overvalued by any conventional measure. But just remember what the man said is that the market can remain irrational longer than you can remain solvent.
Well, that's why it matters so much what the Fed does shortly. If they start trying to taper and then start literally talking about higher interest rates, that historically has broken bubbles. And so, it's possible that some of this stuff happens sooner rather than later, because the Fed meets this week and they've got guys saying, yeah, we need to start tapering in November and then go to higher interest rates early in 2022. And, let those guys be the loudest voices. And we're there, and so we may look back and, oh my God, the NASDAQ 100, if I just mortgaged my house and shorted that.
Hey, that old saying, what does a teller do? He tapers. So anyways, we might very well see it. Well, in any event, that's it for today. We'll be back in a week or two. Just go over to John's site, dollarcollapse.com, sign up for his newsletter, go to financialsurvivalnetwork.com, sign up for ours. John, we'll talk to you in a bit.
Okay, see you, Kerry.